Hello guys, and welcome to your market report. Glad to have you guys here. Now the first thing we're going to do right here is we're going to open up the charts right now. And excuse me. We're going to go to silver price first. Wow. Okay, let's close the chart in right here so we can get a better look at it. $16.29 is down 15 cents, but we are getting our bounce back now. Now we're getting our bounce back because it was down to almost 16.20, and it's starting to bounce back. I'll tell you, this was a real smackdown, a real hard smackdown, and this is what they do, and this is what they're continuing to do. So we're going to move on to Bitcoin here. Bitcoin has taken a little bit of a bounce, but I don't think this process is going to continue that much longer, really, with Bitcoin bouncing. I think it's still in the process of making bottoms. And so we had a bottom here of 61.20, and I'm expecting it to make another bottom before we see any substantial long-term increases in the Bitcoin price, because that's what it's doing. It's in the bottom-making process. It always does this. We've had, going back, if we take a look, let's go all the way back to the 3-day here. And if we take a look at this big mountain we had here, I call it a mountain, but it's a big raise in the Bitcoin price, all the way up to $20,000. There's a little one right here. If we could hone in on it, and a similar thing, it made it up to over $1,100, you know, all the way down. The starting price was only about $120, even less the price, it went all the way up to $1,100, and then it fell back and it made bottoms. If we take a look, it made a first bottom, and then the price. See, it's awful hard to see it because it's very tiny, but it made its first bottom at around $700, and then it went back up again. It went back up again to like 836, and then it come back down, and it made another bottom like 629. And it found its final bottoms in around 422, and then it continued to drop. It continued to drop until it was down into this area around here, around $215. Now, that's where an awful lot of people that were really lucky got to buy in, around $215, $220. That's the area where I was getting sick of it. I was getting sick of it. I thought Bitcoin was going to die at that point because it fell down lower and lower. That's where I was selling, where the other people were buying, lucky people were buying. Anyway, and then it rose up this giant mountain here, all the way up to $19,666. Now, you'd say to yourself, well, why on earth would you sell down at these prices, these low prices? The same reason you got a bunch of people out there right now selling their silver right now, right this minute. You know, that's the same reason. It's the same reason. They're just getting sick of it, seeing it go lower and lower and lower for ages and ages and ages. Anyway. So we've seen Bitcoin do this before. Now, cryptocurrency market capitalizations right now. We're seeing a little up day and a good little uptick in cryptocurrency market capitals. It can almost back up to 300 billion again. Bitcoin dominance at 39.6%. You notice how when Bitcoin starts to go back up in price again, the Bitcoin dominance slides a little bit. It was around 40%. Well, it's 39.6. We're seeing some substantial gains in some of these coins, except for Tether. Tether has gone down. But now, look at the gain in Tron. A massive gain in Tron of 21.71%. Tron is around 5 cents. Stellar's seen some pretty big gains. IOTA seen a big gain. It's $1.24 this morning. Litecoin has seen a pretty nice little gain, 6.67%. It's back up above $100. It's $100.56. A big gain in Bitcoin Cash. It's back up to $918. Some pretty good substantial gains in Ripple. Ethereum's seen a really big gain, $542. So we're seeing some pretty good gains in some of these coins. Binance coin has got red numbers. Now Monero is up 7.19% at $130.15. Now let's take a look at the Dow Jones Industrial Average. For today, at close, she was it down? No, hold on, let me refresh the page. Market open, it's down 289 points today. But I see support at 23,000, as long as the bond market is staying like it is. They're buying bonds right now, and this is why the stock market's down today, is bonds are up. Of course, we're going to get to that in just a second. Let's take a look at oil. Oil is down 1.59% today at $64.80 for sweet light crude. So we're down a little bit on oil today. Of course, we were down to 64.39, and now we're at 64.80. So I said a couple days ago, I said I think we've seen the just about the bottom of this run on oil. The oil is just about ready to stop going down again. I think that the oil's going to level off a little bit. I got to look into it right now and find out how supplies are. I haven't found out how supplies are in the last few days. Oil supplies in relationship. Now, see why you need to find out why oil supplies are. It's got everything to do with the oil price. The world uses a very, very set amount of oil each and every day. I knew what the numbers were. I think it's like 30 million barrels or something a day. They use exactly the same amount every single day. And so if suppliers supply that exact amount, then the world supply stays the same. But if suppliers supply a little bit more oil than what they use, then supplies increase and prices drop. But the opposite occurs if suppliers don't supply enough oil. Then prices rise because they keep the oil in tanks. And if the level in the tank starts to go down, then they need to raise the price. And if the level in the tanks gets too high, then they need to lower the price. Now, Venezuela has been coming offline with an awful lot of their oil. Venezuela is a major producer of the heavy, thicker oil, and it's sour oil, and they use it to mix with these sweet light crudes, like the price here on this sweet light crude, and so Venezuela is an important producer. They got probably the world's largest supply of heavy sour oil, thick oil, that needs to be mixed with these sweet light crudes. But Venezuela has been coming off, and well, the United States, they've been trying to increase production, but they got a huge problem coming in the United States. It's called the Red Queen. And what happens is these shale oil wells are not good for long-term production. They're more of a quick flash in the pan. They produce for a couple of years, and then they need to be repumped or whatever. And every time you repump them, they produce less and less and less. And eventually, this shale oil boom is going to taper off rather abruptly and leave the world with a diminished supply of oil, which is going to mean extremely much higher prices. Now, I'm anticipating that to happen about 2 more years down the road from now. And so, anyway, let's move on to bonds and rates right now. Let's focus in on the bond market. I'll bring the chart in so you can see it better. The U.S. 10-year is down massively. This is a situation that is defying logic even. The fact that it's down below 2.9% on the U.S. 10-year, 2.89. This won't last. You know, this is not going to last. Not with the Fed coming in at the end of this month with 10 more billion and trying to. But the Fed's loving this. Oh, they must be lapping it up like a cat laps up milk. The fact that these bond yields have fallen like this. I'm very suspicious that they don't have something to do with this. But there it is. You know, we got bond buyers. The question is, can they buy $4.5 trillion worth? Is their pockets that deep? Okay, so now U.S. dollar index. And the dollar is up. She's riding high today, boys. 95.15. And she's up 0.39 or almost 0.5% on the day. This has everything to do with Fed policy. We're going to have to wait and see what happens, but we're not going to have a whole long a time to wait and see what happens because it's only about 10 more days now at this point before the Fed raises the bar. And then next month, we should see the effect of the raising of that bar. I'm expecting by a completely different result in the bond market by the 15th of next month. I'm expecting it to look a completely different complexion than it looks right now. Let's call this the calm before the storm. So listen, thank you guys for listening to this market report, and we'll catch you again tomorrow. Bye-bye for now.